General, great to see you today. The market is lapping up the tightening in the market that the deal delivered. My question is to cast our minds forward, Secretary General. Do you think there's a coalition of confidence now building to bring back supply at the beginning of April?
Thank you very much, Manus, and Happy New Year to you and all our colleagues on the other side of the ocean. I'm so glad to join you at this very timely conference of yours, which we attended in person last year in Abu Dhabi, if you remember, and how times have changed from that important conference you hosted in Abu Dhabi and what unfolded before our eyes in the year of the Lord 2020. And I'm so glad that I'm able to participate in today's conference because you are giving us an opportunity to take stock of this very eventful year and begin to project the way going forward. There is no doubt that there are many lessons that we have learned from this year, outgoing year, and we remain hopeful and cautiously optimistic, I may say, going forward. The decision that we took with our non-OPEC partners on the 4th of this month was a demonstration of our confidence that the worst is over for the oil market and that we are positioning ourselves for a strong rebound in 2021. And hence the flexible but adaptable approach that we took with the supply adjustments, especially for the first quarter of 2021.
So it's about that rebound and confidence, isn't it, to deliver this phased approach, Secretary General? If I look at April, the risk, the market is calculating the numbers, and I want to get a sense from you. Do you think the market can really bear 2.5 million barrels of oil coming back to the market in April? Do you think that that confidence is there?
We are taking it step by step. The decision, the earlier decision, or the original agreement was to bring back 2 million barrels of oil beginning 1st of January this year. And when we met in December, we assessed the market conditions for the first quarter. It is traditionally seasonally impacted in terms of demand, in terms of refinery maintenance, field maintenance, and what have you. And therefore, we decided to be flexible and try to bring a much lower amount with some of our leading producers, the Kingdom of Saudi Arabia, taking the lead with voluntary and additional adjustments of 1 million barrels a day to help us to navigate through this season of low demand in the first quarter.
And that was the gift that His Royal Highness Prince Abdulaziz Salman said that he was gifting to the market, a sovereign decision. The market is still trying to work out what was the driver of this deal. A pause from OPEC, a cut from Saudi. What was the rationale in that virtual meeting, sir?
If you recall, Manus, we had 2 days of extensive discussions and consultations, also following market developments, including on Bloomberg. And we came to the consensus that for the adjustments to be meaningful and impactful, we should not bring back the 2 million beginning January.
So was it a demand? Was it more about concern on the demand side, Excellency?
Yes, demand is a key variable. It's a very key variable, but there's a combination of interrelated variables, if you like, that need to fall in line. And we have continuously tried to see how we could manage this emerging correlation, if you like, between these variables. One is the issue of vaccines. 2 is the lockdowns. 3 is the fiscal and monetary stimulus. 4th is our action as OPEC and non-OPEC on the supply adjustments. 5th is how does the global economy, GDP growth, response. And finally, the key variable that you talked about is demand. In sum total, looking at all these variables, how will they impact demand going forward? So,
and for you, Secretary General, what was the most important out of those variables? Because we're moving forward fiscally, hopefully some would say. So what was the most important variable for you, Excellency?
These 6 variables that I mentioned in today's market, they are all interrelated.
Okay.
They are all very, very important. And therefore, we have to keep our eyes on all of them and remain on the driving seat going forward.
You have to make sure those speculators are ouching, I think, to paraphrase somebody else. We're trending higher in this market. Goldman Sachs says $65. Bank of America says $60. Can you see an alignment of those 5 factors that would take us up to the 60s? Could you envisage a market at $60, Secretary General?
These 6 variables that I enumerated, they are correlated in one form or another, and they eventually will address one key issue of this imbalance, the issue of stocks. Despite the heroic efforts, if you like, that we have put in 2020, we continue to see stocks stubbornly high, and the inverse correlation between stocks and the market is well established, and we continue to see that going forward even currently. So what we are focused on is how can we assist the market in accelerating the stock drawdown in order to bring the market back to balance.
And what do you think the primary driver will be to bring the stock levels down? Is it less exports to OECD and to the US? I mean, we saw 0 exports from Saudi to the US a couple of weeks ago. We haven't seen that for many decades. Is that the primary driver to bring the inventories down?
We are looking at both the OECD and non-OECD stocks. And I can tell you, both of them are currently very high. In terms of the OECD, they are over 160 million over the 5-year average, despite the drawdowns that we have seen since autumn of last year. So we are focusing on stocks globally, not only OECD, but also in non-OECD, because the market is continuously breaking these barriers. Hitherto, if you remember, the focus was mainly on OECD because we thought these were the demand centers, these were the market centers. But if you look at the non-OECD figures, they are of concern.
Couple of things. The speed of this rally, you still didn't tell me whether we get to $60. Do you think we get to $60?
We are not focused on price.
Okay.
We are focused on returning this market to stability, which had eluded us most of 2020 to the detriment of not only we producers, but also consumers and by extension, the global economy.
Okay, that's a very honest admission to sort of the market got away from you. The speed of the rally that we've seen so far, Secretary General, since the deal, one or two people are saying to me, OPEC must be concerned maybe about the speed and that you've over-tightened the market. What would you say to that?
I think there's no cause for alarm. We had decided way back in December, it looks like a long time now, that we would begin to meet on monthly basis. And this is the 1980s all over again, to make sure that we keep our hands firmly on the driving wheel. The fragility, the uncertainties of this market and the world that we live in post-COVID, it requires OPEC and our partners in the non-OPEC to continue to meet every month to ensure that this market does not relapse into the huge imbalances that we saw last year.
With that in mind, there are a number of things that could drive the agenda in 2021, Your Excellency. One of them is a new administration in the United States of America. Biden comes to power. We know his ambition is to return to the JCPOA, and that, Secretary General, could mean, greater minds than I have done the math, 1 to 2 million barrels. Is the OPEC group willing to make room potentially for that level of supply in 2021?
Manus, you were with us in 2016 when we agreed in accommodating Iran, when Iran came back after the JCPOA, if you recall, here in Vienna. And we collectively decided to exempt the Islamic Republic of Iran at that time until they restore their capacity pre-sanctions. So we have established a record of continuously adapting, continuously being flexible, and addressing issues as they emerge. I cannot preempt what will happen. We are also following very closely these developments, but be rest assured that there is no need for the market to be of heightened concern at the moment.
I will ask you the same question that Anne-Marie asked of His Royal Highness last week. The cuts that Saudi executed, the pause that OPEC has effected, was this a gesture at any level, a gesture of goodwill to the Biden administration to make it easier, to help squeeze the market higher, to help make it easier for Biden to bring Iran back in?
You know very well that we are not a political organization, and in all the parameters and the metrics that help us to evaluate market conditions, politics is not one of them. I can assure you that the discussions that we had here, both in December and early this month, were all focused on the fundamentals of the oil market during and post-COVID-19. It's unprecedented. We had never experienced what we saw during 2020, and we remain focused with all participating countries, led by the Kingdom of Saudi Arabia and the Russian Federation, to ensure that while we are emerging out of this unprecedented year 2020, we help the market to recover in 2021.
Excellency, you intimated there, you gave me an insight into the level of risk of perhaps not having control on a market last year. How much risk could shale be to OPEC and OPEC Plus losing control again this year? These prices are rising, shale could come back in. How big a risk is shale to the control?
I think there's no doubt at all that all producers of hydrocarbons have suffered the same fate as a result of the impact of COVID-19 in 2020 and continuing now. We have been in consultations, active consultations with the US through the independents. And you recall we had established this line of communication with them way back in 2017 after the signing of the Declaration of Cooperation. And we continue to meet with them regularly, including in 2020. We had seen contraction in terms of non-OPEC supply of about 2.5 million barrels a day in 2020 as a result of impact of COVID-19. And so the US companies were not insulated from this hemorrhage that we saw. And we had always believed that we have a shared responsibility to maintaining stability in the market. And there is an understanding, even with the US independents, that no one group of producers would continuously maintain stability for this huge market. Don't forget, once upon a time, the world was consuming nearly 100 million barrels of oil every single day. Therefore, it's impossible for any one group of countries to continuously maintain stability for this huge market. And we have reached that understanding long ago with the US independents.
It sounds like Shell were more frightened than you were.
Well, I can tell you in our discussions that we have had with them, they were very much concerned about the fate of the industry generally and the position of the industry in the energy transition. Well, they
Just talk a little bit about that. What are you most worried about post-COVID? Are you worried about investment, the capacity to invest and the capacity of banks to lend to your industry?
Even prior to COVID, we were put on the defensive in terms of the prospects of hydrocarbons in the energy transition going forward. But in our World Oil Outlook 2020, we have explained to the world that oil and gas will continue to dominate the global energy basket. But the huge challenge is what you just mentioned. Investments is the lifeblood of this industry. It is a very capital-intensive industry, and we have already been put, as I said, on the defensive by the lending institutions, the credit agencies, on access to capital to invest in this industry to meet not only current demand, but also future demand.
So let's just circle back as we look at 2021. I will visit you, and Sean will be there. Everybody who's on this call probably looks forward to getting back to chasing you, Secretary General, and every other OPEC minister around the streets of Vienna. So stay safe in the meantime. But I want to get a sense from you of cohesion. We've written a lot about it. We've talked a lot about it, the splits, the wrangles, the arguments. But it's becoming more clear that there is a difference in trajectory between what Russia wants and perhaps what Saudi wants. They perhaps see the market in different ways. Is there a splitting in the OPEC plus relationship? It's traveling in two different directions.
When you put together 23 or 22 sovereign countries in one room to agree on a consensus decision, it is not unusual once in a while to find some bickerings, sometimes some differences. But in the last 4 years, we have just celebrated, if you like, virtually the 4th anniversary of this Declaration of Cooperation, bringing all these countries together in 2016. And we had continued to take these decisions with them, to implement these decisions together, to even monitor the implementation of these decisions. So I think we have established solid relationships that is at the core of multilateralism. And we remain more confident now that having survived 2020, we will continue in this relationship going forward.
You'll hold us all to account, Secretary General, and corral us all as usual. My thanks to you, Secretary General Mohammad Barkindo of OPEC. We wish you well in 2021. Good luck in the next 11 meetings, Secretary General. I'll hand you back to the Gulf Intelligence team. My thanks to Gulf Intelligence for including Bloomberg in the Forum 2021.